Hello and welcome back to video lessons. This is trends that we're talking about again, and in this video I'm going to take a look at determining the trend, more importantly determining when the trend is over. There are a lot of different ways you can do this, and as I alluded to in the previous video, learn to trade determining the trend, 50-week, in this case, moving average could be used to give you an idea as to what direction we're going. But we can also use a trend line. Now, quickly, I will tell you that a trend line is just simply an area where price hits a support line several times over. You want at least 3, and the more the better. Now, one thing that people won't tell you is a lot of times trend lines are a little bit messy, especially when you zoom way out like this. So that being the case, we might be a tick 1 or 2 in the other direction. But you can see that DuPont was certainly in a very strong uptrend based upon this trend line. And you can make an argument for a trend line here. And as we continued to see support, obviously you wanted to be long of this market for quite some time. But going back to this example, as long as you had trend support and the trend line holding up, there should only be one way to trade this market. You're either buying on the dips or on the sidelines. So trend lines are an excellent way to determine the trend because they're so obvious, and that's what you want. You want something that's obvious. I'll go ahead and put over here on the DAX daily CFD. You can go ahead and see that it looks like we've got a bit of a trend line forming here. So we're most certainly in a bullish market. We've been going higher. It's really not a whole lot to discern from that. But here is where things get interesting. Now, I believe that a trend line is not actually broken, if you will, until you close below it. So one can make the argument that even though we dipped below here, we formed a hammer, which is a bullish candlestick. It shows that the sellers couldn't continue to push the price down. So we bounced back above the top of this trend line and we continued much higher. So then the question becomes, how do you want to determine when the trend's over? And the easiest method is the 1, 2, 3 method. And I will have to zoom in a little bit for this. This is the same trend line on the weekly chart again for DuPont. And you can see that we had a break and a close below that trend line. And that is the 1. The 2 of the 1, 2, 3 method is testing the bottom of the trend line. Because much like horizontal support and resistance, what was once support should now be resistance and vice versa. And the reason is simple, because people who were hugging this trend line, kept buying positions, now are losing money. They want to get out as close to break even as possible. You're essentially talking about scared money, and there's a lot of it out there. So we have a lower close underneath the uptrend line. Then we have the retest. And now we have the 3, which is the close below 1. So essentially it's a zigzag pattern. You get 1, 2, 3. And this works in both directions. If you're breaking above a downtrend line, very much the same thing. So what this suggests is that you should be selling here because not only have the sellers stepped in, but the buyers tried to return the market to the upside, and then they failed and were now lower. So anybody who's involved in this market is losing more money. And you can see that we just simply rolled over at that point. Now, again, I would state that you need to look at the higher time frames, if at all possible, and then place your shorter term trades from that, because you could have that bias. And then, of course, place trades on this daily chart, and you can see that you could have really kind of picked off the trade where you wanted it. So I'm going to go ahead and pull up another chart, and I think for this one I will use pound dollar. And you can see that we have been very negative for some time. I'm going to go ahead and zoom out here a little bit because from memory, I believe that we had a bit of a trend line right around here. Yeah. And you can see that we tested this downtrend line and we broke above it. And we came back and we tested it twice. So we had a 1, we had a 2, and then eventually we closed and it's a 3. And that's a buy signal. That shows that at the very least the downtrend is over. Now, that doesn't necessarily mean we're going to rocket straight up. We could go sideways for quite some time. But remember, the longer term charts, this is a daily, so this isn't quite a weekly, but the longer term charts carry more weight. A weekly chart, you can see that we had a little bit of a downtrend line at the same place, obviously. We have tested it, and now we've tried to rally. Oddly enough, when you look at this chart, we have a couple of hammers forming right here at previous resistance and support, going back to the horizontal support resistance. So you can see this is very easy to look at. The problem you run into is you have too many people plotting too many indicators, or worse yet, doing something like this. Okay, so this is a 5-minute chart. I'll even make it 15 because 15 is a little bit more common. And you have a trend line here that has been broken. You could make an argument, is this a 1, 2, and possible 3? I don't know. But when I showed you the weekly chart, it was bullish. So what do you think matters more? Remember, it takes more volume and more order placement to make that weekly chart change things. That doesn't mean, again, I'm not saying that the British pound is suddenly in an uptrend, but it certainly is making an argument to return to one. That being said, you then can drill down to shorter time frames and find a trade that lines up with your support and resistance and your downtrend line in this case, or in this case, your uptrend line being broken, placing the trades all the way up, and then when it gets broken, you realize that it's either the end of the trend and it's time to get out, or it's time to short. You could have done either in this situation. If you were already long here and you jumped out, you're a long-only stock trader, that's fine. You made plenty of money and you got out before it got to be dangerous. Trendline breaks matter, especially on the weekly charts. Pay attention to them.